welcome everyone to this episode of Dhandha series. It's been a long time and the result season is over. So we are very delighted that we have Gokaldas management today with us. We are very, very eager to learn from the management themselves. Shiva sir has agreed to be our guru today. Shiva sir, first of all, thank you so much for joining
Thank you.
Series by Omkara Capital. And as I always say, at the risk of sounding repetitive, the effort here is to understand the business not on a quarter-on-quarter basis, but to understand the industry and the company for a long-term perspective. We want to make this episode so that my mother can also understand, so in such a simple language. So you can use Hindi, English, whichever language you are comfortable with, but be our guru today for the next 1 hour and help us to explain the industry and the company for a longer term.
Sure.
We are also, of course, joined by Devesh. He's the senior research analyst here with Omkara Capital. He's the one who is tracking the textile sector. So Devesh will ask all the tough questions to you, sir, and I'll ask all the stupid questions to you.
Suit yourself.
Thank you. Sir, before I start anything, we follow this principle of PPP, which means the promoters first, then the product, then the price. Coming to the promoters first. Gokaldas' journey has been just amazing. Can you take us through the journey of Gokaldas, how it has been, because there has been a lot of transition in the past. We just want to understand a bit about the journey of Gokaldas.
So the company itself is almost 40 years old. It was founded by a family, the Hindujas, and it ran within them over 3 generations. And they have run the company. They've founded the company. They grew it organically over the years. Took the company public in 2005. So it was established in 1979. Took the company public in 2005. And come 2007, they decided that the family would exit the business, and they sold their entire stake to Blackstone. Blackstone, which is an American private equity firm, thought that they are getting a great asset, which is in the exports business where they can add value. The company, they were getting a majority stake so that they can influence the outcome of the business. And with all of that in mind, they brought the stake of the family in the company. The family was there to transition for a brief while, and then the residual management team took over the business and ran it. Blackstone was in the promoter's seat till about 2017 when they sold that stake to an ex-Blackstone person who left Blackstone and founded a fund. And bought over Blackstone's the then stake, and that was Matthew, and the Florentry investors, they came in and invested into the company. So they've been the promoters of the company since then. The company has seen interesting days, difficult days, and again growth days since its inception. It's always been known for its agility, the ability to deliver high quality products to its customers, and has got deep technical expertise in the apparel sector. So that goes without saying. The company has had the relationships with the customer, the longevity of the relationships with the customers, which enabled it to get close to them as well. So with such a long history that the company had, the company could also capitalize on its historical knowledge, on its historical relations to perform, to grow, etc. in the years ahead. So that's the kind of brief history of the company. I joined the company in October 2017 after Blackstone's exit, and ever since Florentry, through its investment channel Clearwealth, took over this company. So I have spent about little under 5 years at this company, and has been an instrumental in turning this around. The company was underperforming at that point in time, and helped it get onto an even keel. helped it on a strong growth path, and that's been the journey over the last 4.5 years.
So that's my next question, sir, because whenever we think about Gokaldas, we think about you. As you rightly said that you have been instrumental in terms of turnaround of this company. Can you help us to understand what was your past in terms of experience before joining Gokaldas? And it's very easy for a lot of people to talk about Gokaldas now, like in 2022. But when you joined in 2017, the picture was very, very different. The textile sector was not in a good shape. What led you to ultimately join Gokaldas? Because 2017, I can assume it was not a good phase for the textile industry and even for Gokaldas.
Okay, so I've been with the Aditya Birla Group prior to joining Gokaldas. I've been with them for 21 years, and I've been part of various businesses at the Aditya Birla Group. My last stint was at Idea Cellular, and prior to that, I was instrumental in setting up and growing the BPO business of Aditya Birla Group. It was called Aditya Birla Minax, and the principal operations of the company were in India, Philippines, and of course North America and Europe. So we had global operations. I was with that company till about 2010, and from 2010 to 2017, I was with Idea Cellular. And even before the Aditya Birla Group, I have been with in investment banking, in consulting, so various different roles. I started my career as a design engineer, designing chemical and petrochemical plants. So I have been in very, very different businesses since the 80s. So
nothing textile.
None of that includes textile. So textile has been a new sector for me. But the way I see it is business. Your fundamental business principles applies to every business, and actually not having a legacy in the industry really helps. So you can come in and see the issues, see the challenges with a fresh perspective, and come out with solutions which are also unique and different, capturing the essence of all the past experiences that one has from various different industries.
Very true. So what led you to decide that you have to join Gokaldas in the period, I think, which was one of the most difficult period for the textile industry?
Oh, that was an easy one. There was Matthew, who was in Blackstone and who then came in to acquire, is a personal friend of mine. So it was just two friends catching up and helping one another. So that was the genesis of me coming in. I thought that I will come and help turn this around and then move on to do other things. But here I am enjoying every minute of what I'm doing. And I think the opportunity for the company keeps improving day by day as we see. And there is a lot to do. So I'm enjoying every minute of it.
Lovely. Devesh, bhai, you can budge me whenever you want. Okay, I'll keep on asking questions. So you can stop me or interrupt me whenever you want. So we understand the promoter and the promoter part. Just to end my discussion on the promoter, sir. So how much are the promoters like Matthew and Florentry involved in the business right now, or is it like you are the whole sole person?
No. So they're quite involved. They're involved in terms of being involved in the strategy. It's a board managed company, and they're very much involved in the board. They're very much involved in the broad strategic direction of the company. Whereas all the day-to-day operational decisions, etc., are fully run by the management team. The management team has got the full autonomy to run it. To deliver the results as we deem fit.
So when we talk about Gokaldas to a lot of investors, sir, this question always pops up: the key man risk. So what happens if Shiva sir leaves Gokaldas?
No. So the company has got a lot of people. We have 32,000 people across the company, and to manage that large enterprise, you need multiple layers. So there are enough and more management team and very, very capable people in the company who can keep running it. So I don't think anybody is indispensable, and the same applies to me as well, and the same applies to everybody in every position that one holds in an organization. So the company can run very well. So there is no key man risk the way I see it.
Lovely. So I'm assuming that there will be a strong ESOP policy also, right, for you and others?
Yes, indeed. There is.
Because that's a very important thing, since it's an important position, and of course an industry which is turning around, for you to be sticking to this company.
Of course.
Lovely. Devesh, any questions on the management side till now, if you have?
Yeah, yes, sir. Just wanted to understand what changes you made after you joined in. So we are seeing this strong growth coming in over the past few years after you joined. So what changes you made, strategically, culturally?
Yeah,
So,
the question, if I may rephrase is, sir, what was Gokaldas before 2017 and from 2017 to 2022?
So I'll when I joined the company in October 2017, I found that there were several challenges that the company faced, and there were some of them which were fundamental to running the business, and some of them were more immediately precipitated challenges. For instance, at that point in time, GST was implemented, and the export incentives which the company was getting at that point in time got reduced by about 2.9%. Now, 2.9% of incentives, 2.59% of export revenue is a substantial portion of what you earn. So the company lost that because the incentive regime changed. One of the banks which was supporting the company, which was a key lender to the company, came under prompt corrective action, which RBI had ordered at that point in time, PCA, and they reduced the working capital line available to the company by about 40 crores. So that was another hit which happened almost at the time that I joined. So when the company needed capital the most, company lost access to funds. So some of these were more precipitative, and it just further strengthened the resolve of all of us that we have to do something, and something very fast. I went and met several customers of the company, and some of the things that I heard from them were, number one, the financials of the company historically have been weak. We are concerned whether you will be a going concern, whether you can be a long-term supplier to us, looking just at your financials. So that was one. The second one, which they said, was you've not invested in upgrading your plant and machinery. The quality expectation from our customers, which is the end customer like you and me wearing garments, is going up and up. And if you do not upgrade your machinery, you will not be able to deliver the quality or the higher qualities that we seek. So we're concerned. And the third was your on-time delivery is, track record is poor, and we are very concerned about it. There are several challenges in terms of several orders being airshipped, and that is a clear indicator that your manufacturing process and your supply chain is not in order. So these were some of the broad themes that I heard from the customers. It was quite concerning at that point in time. The company also didn't have much of capital for investments in upgrading the plant and machinery. As I said, even working capital was stressed because of the withdrawal of bank line of credit. So the immediate need that we felt was to inject some capital. So we went and raised about 70 crores through a QIP in April, May 2018. I also sold a surplus land which the company had in Hyderabad. There was a factory which was shut down for ages, and we raised about 30 crores through that process. So raised about 100 crores, and this 100 crores helped turn the whole thing around. So with that capital in hand, we did a few things. Number one, made sure that our customer relations are super strong. So when kept on interacting with customers, kept on learning from them as to what is it that they're seeking from us, and delivered on the few things that they were keenly looking for. So upgrading the plant and machinery, making sure that we were consistently delivering what we had to deliver. Now, if I have to deliver my output in on time, in full, all the time. I keep in mind that the products that we produce are, we have thousands and thousands of styles that we produce, right? And each style has different colors, different sizes, different destinations. So the SKUs that we have are immense. And if you are producing that kind of product variety, you need a very elaborate supply chain. So if your raw material is in on time, then your finished goods can go out on time. And of course, you have to manage your factories efficiently. So we did a lot of work on internal operational management, supply chain management, etc., and made sure that our on time in full delivery is 99.9%. It took about a year or year and a half to achieve that. But once we achieved that, customers really liked us. The relationship just went to next level, because they saw a new sense of purpose in the company. They saw the company, walking the talk and delivering what it promised, and over delivering rather of what it promised. So this was one part. The other one, was the realization that, look, in this business, you make money in your operations. Your factories is where money is made. The orders are booked at market prices. You just cannot influence the price in a B2B business. If I quote 5% higher than my competition, there is no way I can get the business, right? So I need to be super efficient in whatever I do. So we worked on the entire operational matrices. So supply chain, every raw material element was tracked and delivered to the factory on the date it was supposed to be delivered as per the planning. The factories were managed for line by line, hour by hour, to see its productivity kept. Targets were set high. We looked at every aspect. So, for instance, introduced industrial engineers to see how we can improve the number of units that we can produce per hour. We looked at consumption and said, if I can reduce a few centimeters of fabric per garment, then that's a saving to the bottom line. We worked on that. If we worked on rejections. So if my rejections at one point in time was 4%, we brought it down drastically to 1.5%. And those kind of initiatives really helped us improve our on-time delivery, and B, our profitability. So it was a win-win for our customers as well as for us, our shareholders. So did all of that. The third part, so one was the customer part, the other one was internal operations. The third one was the whole, capacity unlocking. So I quickly figured that in this business, you cannot stand still and be successful. You have to grow. And growth is the panacea for many of the ills that we were facing. So there is one notion saying that, okay, let me cut down my high cost factory, or let me cut down my customers who are not profitable, etc. But on the contrary, our logic was, we have to grow. Let's work on incrementally utilizing our capacity in full. That will give us a good ROI. And the whole idea was that the incremental revenue should be generating incrementally higher EBITDA. So obviously, it will be accretive to the business. So we worked a lot on capacity utilization. The marketing teams were tasked to get as much orders as possible, while the operations started, delivering on those orders. We took some spare machines which we had and bought new machines. In all the factories, wherever there was additional space available, we started adding additional lines to increase the capacity of those factories. Now, these are all brownfield expansions. The capital investment was very low, because the super infrastructure, which is the buildings, the boilers, etc., all those other peripheral infrastructure was already available, and we just had to put operating lines and we could get incremental capacity. So this was a low cost way of adding capacity. So that itself brought in a better rate of return. The other thing we did was, our capacity utilization was not even through the year. So, there is a skew in this industry, because this is a fashion industry. And during different parts of the year, we produce garments for different occasions. So in Q3, we will produce for spring. In Q4, we will produce for summer. Typically, these are cotton-based garments, which are consumed in spring and summer in the Western world. Whereas in Q1 and Q2, generally the demand is for cold weather, where, autumn and winter. So it's all synthetics and those kind of stuff, which is not India's strength. So usually the capacity utilization would be low. And I found that there were several opportunistic customers who were coming in and utilizing our capacity at marginal prices. So we got rid of many of them. We made sure that we enhance our capability to produce outerwear, and which were being produced in Q1 and Q2, so that we had a reasonably even utilization of our capacity with big, profitable and sustainable customers. That itself helped us improve our margins as cap utilization became more consistent through the period.
Wow. Wow.
So this is the third area. And the fourth area that we worked on was creating a business system itself. How do I have an environment which makes me scalable? So if I have to, let us say, grow and set up 3 new factories, 5 new factories, I should have an approach where I can just go have a system, process, etc., so that the new factory can be onboarded pretty quickly. So the IT systems for it, the digitalization, the entire factory management, we adopted a very standardized process, which was very essential for scaling up the business. So we worked on all these fronts and made sure that we perfected it over the first 2 years. During this period, we also had some additional challenges. We had further reduction in government incentives. There was an MEIS we used to get, which was 4%. Yes. I remember in March of 2020, we lost it with retrospective effect from the previous year, March of 19 or something like that. So we weathered all those storms. We took that in our chin and made sure that we delivered to our customers, as well as improved our profitability margins through this period.
Lovely. So, sir, before jumping to the company, I just wanted to focus also, because I have lots of questions on the company. Let's talk about the sector first. Okay. Can you, because a lot of retail investors will be seeing you, can you just help us to explain different value chains of the textile sector?
Okay.
So because there are so many companies in India, and everyone believes that koi bhi textile company sab ek hi textile company hoti hai. So,
okay.
And where is Gokaldas? And what is the USP of Gokaldas? So many different business chains, value chains, but where are we into this entire textile sector?
Right. So the first part of the value chain is the fiber itself. So cotton, which is a natural fiber, is grown. So it's an organically produced fiber. So it's grown in farms. It's an agricultural product. There are man-made fibers like viscose staple fiber or rayon. There is polyester, there is nylon, and several other fibers like acrylic, etc. These are all produced in machines in large integrated fiber units, and there are those fibers or filament yarn, as the case may be, or the cotton, are then further converted, spun into yarn. So there are spinning companies which convert those into yarn, and these are different companies. For example, Reliance is a polyester staple fiber and polyester filament yarn maker, but they don't get into spinning. That's the next part of the value chain. Somebody else will do it. So there is the spinning industry which converts it into yarn. Then there is the weaving industry, which is more fragmented, and there are a lot of power looms and some integrated players as well, who will convert it into fabrics. And then there is fabric processing, which is again a larger play, where you do a fabric dyeing, printing, processing, etc., to get to the fabric that you finally use to stitch a garment with. And then you convert that fabric into a garment, which is done by the apparel manufacturers. So this is the value chain. There are players who play in specific parts of the value chain. There are some players who are integrated in a few parts of the value chain. So for instance, Gokaldas only does conversion of fabric into garments. Now there is a company called Shahi, which is into fabric production as well as garment manufacturing, and they're all the way from spinning to fabric production and garment manufacturing. But the capacities may not be fully balanced. The garment production capacity is far higher. So there are different players who are in different parts of the segment. Arvind, for instance, is again an integrated player. So there are different players have different philosophies and different strengths to which they play. There is also, if you look at the industry, broadly it is split into wovens and knits. The shirts that we wear are woven garments. There is a warp and weft to these garments. The t-shirts that you wear are typically called knit garments because the production of the fabric is in a different manner. So value-wise, woven and knit are more or less 50-50 globally. So in global apparel trade. Gokaldas focuses largely on woven apparel manufacturing. There are some players who focus only on knit manufacturing. So for instance, there is a company called KPR. They manufacture only knit products. They don't come into wovens. So we don't compete with them because we are in two different segments, both of which are half and half in terms of global market share. So the industry is fragmented in many ways. If you now look at it from a fiber perspective, man-made versus natural. So natural is about 1/3 of the global apparel industry, which is cotton based, whereas man-made fiber would account for almost 2/3 of the industry. So there are, you can cut it and slice it in different ways depending on how you look at the industry. So the industry has multiple players in it. Each player feeds off the player in the value chain above and supplies to the end customer. But the apparel maker, which is like us, are the closest to the end customer, the brands who are buying it and selling it in the local, whichever countries that they operate in. So we are the ones who spot the trend first. We are the ones who are closest to the market and hence understand what is happening, what is going on, and then the rest of the industry typically tends to feed the apparel makers.
Got it. No, thank you, sir. This was very, very important. Second question, sir, how is India as a country, because we were way behind in terms of what we could have done in the textile sector, but we lost to Bangladesh, Vietnam earlier. If I have to just focus on the apparel industry in India, how are we placed compared to other countries? And do you think enough is done, or for us to at least make some dent going ahead? One question which always comes to me, at least when I talk to investors about textile sector, over there is sector mein ROC banta hi nahi hai. The ROCs are not there in this sector. What to do? When we look at Shahi numbers, I'm sure you know better than me, but these guys have done amazingly well. So, yes, it's a fragmented market, but there are very, very few players in different parts who are doing good work, but as a country, we are very way behind. So I just wanted to understand from you that whether even this is a good sector to invest, or are things on the ground changing at all compared to other countries? We hear about all this FTA noise, PLI and everything since last few months.
See, if I look at the global apparel trade, it is approximately 500 billion. Okay. Now the biggest producer is China. Last year they produced about 132 billion. So they have a dominant share of global apparel trade. But at one point in time, China was almost 190 billion. So they have come down over a period of time. So their share has been constantly declining YOY in the last 8-10 years. So after China, the next players are Bangladesh and Vietnam. Both of them are at about 35 odd billion, thereabouts. And then India is, about 16 billion last year. So the in the pecking order, the others fall down pretty quickly. The biggest consumption centers, of course, are North America, Europe, and China itself, because it's a big market, right? I mean, Asia, China, Japan, etc. But China is a very, very large market. So what's happening here is that the Chinese apparel industry is very integrated. There are a lot of players, but they are very strong in the upstream as well. So whether it is fiber manufacturing, even cotton production, a huge quantity of cotton is produced in China as well. The man-made fibers, are dominant in China. the upstream industry, all the way till fabric manufacturing. They have huge scales, and they've invested, big amounts of money, and they have very modern mills which produce high quality fabrics. The apparel production is manpower intensive. The labor cost in China has started going up considerably over the last several years. And also the one child policy meant that labor availability also became increasingly a challenge for Chinese apparel manufacturers. So what happened was they could not scale up any further, and their cost of manufacturing started going up and up. So for instance, the labor cost in China is almost $500. I mean, anywhere between 300 in the interiors to almost $500 in certain pockets within China per month, which is prohibitively high. So a lot of those Chinese players started looking at alternative locations where the labor cost will be cheaper. This was also compounded by the fact that United States started, imposing trade restrictions on China on account of geopolitical reasons, and that resulted in American buyers also looking at alternate sourcing locations. So automatically, Chinese players started pivoting to other regions like Vietnam, where cost of labor was lower. So, and Vietnam is not too far away. The upstream industry can still remain in China. The fabric can be shipped to Vietnam by road or even by sea, which doesn't take too long, and then converted in Vietnam, taking advantage of low cost of labor. That was the model. But Vietnam's cost also started rising up very quickly, and Vietnam also started developing in electronics manufacturing and other sectors where the employees can be paid better, perhaps. So then the industry started moving from the big cities. Initially, it went to Ho Chi Minh City and Hanoi, to the interiors of Vietnam, and then finally to Cambodia. So this is how the industry has been evolving, where industry seeks A, scale quality on one side, and B, low cost of production on the other side. And when China became expensive, they went to Vietnam. As Vietnam is becoming expensive, they're going to Cambodia. But pretty much after that, the locations are not very scalable. So Myanmar could not sustain because of political problems. Laos, etc., did not scale up. And there aren't too many options after that. Bangladesh, on the other hand, had abundance of labor. It had cost-effective labor. So labor was cheap. The labor policies were also conducive for scaling up the business. It did not have any raw material access except from India. So, from India, fabric could move over the land border and cross over to Bangladesh, but it still takes a lot of time. But the labor economics was compelling in Bangladesh, so the industry started growing in Bangladesh. The other advantage which Bangladesh enjoyed was also duty-free access to Europe, where they got a 10 to 11% straight up advantage, because the goods produced in Bangladesh would enter duty free, while that produced in India would have to pay duty and enter the European Union. So that was a twin advantage, both labor and duty, which was a formidable advantage which Bangladesh enjoyed, and it was very well supported by the government. The industry simply blossomed and grew. It from nothing in about 10-15 years, they grew to about 35-40 billion dollars. And hats off to the Bangladeshi entrepreneurs. They have done a fantastic job of scaling up the business. India, for historically, has been a textiles player. India has enjoyed a stable stable share in the textile trade, but it has not really grown much. So India just could keep its share despite others upstaging it, like China and Bangladesh and Vietnam. And now India is taking advantage of China's decline in this space. So as China is year on year declining, more and more business is coming out of China. And if you look at the opportunities for somebody to manufacture out of Vietnam is limited, out of other countries are limited, automatically the mantle falls on India to take up and deliver. The world has tried manufacturing in Africa, manufacturing in Latin America, Central America, but somehow they were not very successful in scaling up operations in these regions. And Asia continues to be large manufacturing zones. The manufacturing mindset exists in Asia. With infrastructure improving in India, the opportunity for India becomes, that much more better. So in this milieu, now what has incrementally happened is that there has been a supply chain consolidation post COVID. So what is happening when the brands were looking at their supply chain and their fragmented supplier base, they found that the weaker suppliers were rendered far weaker post COVID. They didn't have the financial strength to weather a pandemic like COVID. So they became weak. They could not get bank line of financing. Their credit rating fell, so on and so forth. The other thing was compliance itself, sustainability, compliance, etc. meant that the brands globally were quite acutely aware of their responsibility to their end customers, that they will source from ethical players, they will source from players who meet the ESG norms, etc. So automatically it meant that they had to go to larger players like Gokaldas, where the ability to invest for such reasons exists. A smaller player may find it harder because return on investment on some of these are non-existent, right? If I put a few machines, I do get an ROI, but if I structurally strengthen my building or provide fire compliant doors, or add more space, etc., those investments don't yield returns. So it becomes harder for smaller players to keep pace with the compliance requirements. All of this meant there was a degree of supplier consolidation which started happening as well. The other benefit that India started offering the global markets were that our rapid rollout of vaccination. So India actually, post the Delta wave, which happened almost a year back, all put COVID behind us. And after that started vaccinating people, whereas you would have seen that even a Bangladesh, Vietnam, China had several COVID related lockdowns post Q1 of last year. So the world supply chain got really impacted. China even had a lockdown as late as April and May of 2022. So there has been a bit of a concern that is too much of our manufacturing capacity in vulnerable regions. Should we look at diversification? And India suddenly started looking as very sustainable location. On top of it, the strengthening dollar or weakening rupee made India, along with a few other countries, quite remunerative for outsourced manufacturing. Central government took a lot of steps in terms of announcing a stable stable ROSCTL or incentive regime all the way till FY24. The government also announced PLI scheme supporting man-made fiber in a based textile industry. The government started entering into free trade agreements. So FTAs with Australia and UAE were signed. FTA dialogue with UK is in advanced stages, and a dialogue with EU is expected to start next year. So all of these moves by Government of India really started creating an environment for growth in India itself. Now keep in mind that an FTA with Europe can give us a level playing field with Bangladesh. It removes that one major advantage that country has, and suddenly customers will who are focused for economic reasons on Bangladesh will start diversifying their production base and will automatically come to India. So it opens floodgates for the country. That's how I see it. If you look at the customer base, especially the American customers, they're quite worried of their vulnerability to China. Today's geopolitical situation means that if you have, let us say, 30% of your products being sourced from China, and for whatever reason that shuts down at some point in time, then their own business economics will come to a standstill, or will be hit hard. So boards are directing them to diversify their supply chain. So all of these aspects slowly are pushing more of manufacturers to more of brands and retailers to look at sourcing from India. Great opportunity for us to look at and expand, taking
But,
advantage of this.
sir, aren't we too late for this? As you rightly said, we have been stuck at this 15, $16 billion since last, 10 years? Bangladesh from nothing to $35 billion. I don't know whether enough is being done by the government to push the textile sector now with all the things what you said. Do you
No,
think
no, no, no. See, most of the
second, okay, we talk about China, and China is of course, China, Bangladesh, all these. But what about the sourcing part? Because cotton right now has been a major issue for the textile industry. And the way the strikes happened, the way the cotton prices hit a lot of garment players also. On the cotton side, I don't think so. There is enough which is done by the government. Do you think that are we ready as a country to go from that 16 billion, 1 decade stuck there, now go to 35 billion, even if this FTA happens?
I think we are ready. I think we are ready. So the industry has also gone through a churn, and weaker players who are not able to sustain growth, etc., have atrophied. The stronger players are now well capitalized. They have the confidence to invest and grow in the business in India. The global brands are also looking very positively towards India and looking at increasing their sourcing from the country, and the fact that there is no alternative from other locations. So in the past, when China was weakening, the alternative was clearly Vietnam, because you could clearly take advantage of the Chinese supply chain and just move the manufacturing to Vietnam. In fact, it was led by the Chinese apparel manufacturers. But now, even that, those options are gone. They are, or because they have matured, you have to look at other options. The global geopolitical scene has also changed dramatically in the last 2-3 years. Post-COVID, a lot has changed, right? Suddenly, people feel that putting so much of manufacturing source or sourcing capacity in one location makes them super vulnerable. So there is a clarity in most brands' mind as well to diversify out. So some of these factors are more immediate or more of recent origin, which is really auguring well for the country. And there are now players in the country who are willing to step up and cater to that. So automatically this means that there is an opportunity for the Indian industry. It would be a shame if we let it go. I think this opportunity will be there for at least 3 to 5 years.
I don't doubt that, sir. I'm just saying that is the government done enough to propel the growth of the textile sector, which it should have been done long back. I'm ashamed to think about that. That we were as a country so back, and I think this sector deploys one of the biggest population, in the country. So I don't know whether the solutions now which are popping up right now they are the only answer to go to $35-40 billion for the sector, or do you think there has to be more enforcement of things to be done by the government? Because this sector can't run, unfortunately, without the push from the government, right?
So the way I see it is, see any sector which becomes dependent on the government is not sustainable, right? So IT sector had tax holidays, income tax holidays, etc., for a long period of time, but after that, all that went away. They learned to stand on their own feet and deliver their results. A sector which depends on government, I would say they forget about that sector. I don't think we should really expect that to happen. So government plays the facilitative role, and that is what we should expect, and nothing more, in my opinion. So having a stable export incentive regime, which is really not an incentive, it is really a refund of embedded taxes. So if that, which has been spelled out till FY24, at that closer to date, if it gets announced for a longer period of time, we have clarity in the industry. The state governments which are providing incentives for incremental capacity creation in India, which makes Indian costs in certain states comparable to Bangladesh, if those are still intact and they honor their commitments in terms of providing the necessary incentives, I think that's more than enough. I don't think anything more is required. The government is also working on an FTA with UK and EU. If those also happen, the rest has to be delivered by the industry. Now the industry has to step up and modernize itself. The industry has to step up and professionalize itself in order to deliver those, high expectations, which are from the government, from stakeholders like you, and from the customers as well. So if India is able to demonstrate that, and India has demonstrated that in a few other sectors as well, right? So we could do that. This is a more complex industry, given that the sheer product variety is huge and the supply chain is more complex. But Indians typically tend to thrive in a complex environment. Our entrepreneurs are no less capable. We should be able to step up. We need well capitalized players. I think today capital is also available for good players. I think this can be, this is a time when this sector should start showing strong growth.
Lovely.
What about labor? Since apparel is a very labor intensive, so to capitalize on taking India from $16 billion to $35-40 billion, so what should we be doing on the labor side, on the labor management?
Yeah. Also, we heard, sir, that the attrition rate in some of the textile companies is 3 to 4% per month.
Yes. So that's given. It could be higher than 3 to 4% also. So I don't think that's an issue. These are constraints, the way I see it, right? They are not deal breakers. They are not impediments. In my opinion, is Indian labor as productive as a Chinese or a Vietnamese labor? Answer is no. The work ethos of those countries are far, far higher because they are far more industrialized economies. In India, the agrarian mindset is still far more entrenched, especially in the labor class.
Very true.
So people tend to clock hours instead of clock productivity. So that mindset has to change. It requires a lot of training, a lot of work at the labor force level. For instance, we employ a lot of women. 85% of our labor force is women. In India, socially, women are responsible for their family, particularly their children, and earn money for whatever the family as well. So they are doing many things apart from work, and if the family does not support them, so for instance, when the child is unwell, the woman who is working in a factory, her mind is at home, with the child. Now, if the family members are taking care of the child, then she will be more at peace and do her work in a high productive environment. But this is still to evolve in our country. It will evolve over a period of time. In other countries, I find that women working are highly respected, and family members do tend to take care of their home responsibilities when the women are away, which has not yet happened. So there are such social constraints that we have. But barring that, I think our people work as well as anybody else. It is important that we have a strong middle management, which is where the factories get anchored. If your middle management is strong, the workers will do what they expect, what we expect them to do. They will deliver the goods that are expected of them. The middle management sets the culture also of the company. So how good a cadre you can build there, and that allows your scalability. The other thing is around labor laws and all of those aspects. I think sometimes it is overrated that Indian labor laws are onerous, etc. Yes, it is onerous, but if you work within the framework, you should be able to work well. You have to also play within the boundaries of the law and ensure that you adhere to all the law, which people like us do, because we are a large player and we have to be compliant to the labor requirements, and we are audited all the time for it. Once you set your business in that fashion, I think after that, there is no constraint. You can scale.
Sir, generally with what I have seen is that this industry has always been a lala industry.
Yes.
And unfortunately, there are guys who come in, and we have seen a lot of guys being wiped out. Also, as you rightly said, consolidation has happened with Alok, Bombay Rayon. Arvind has not been able to do any further thing. What differentiates people like you? Do you guys actually deploy a lot of technology, SAP, CRM into the business, because you're managing 30,000, 40,000 employees? What are the process which follows with companies like yours or even Shahi to differentiate the size? Because from here, we are talking about $30 billion or $35 billion. You grow to 5 times, 10 times in the next 5-10 years. then there has to be something unique in terms of processes what you guys do compared to others. Is there something which is done in Gokaldas?
So it's actually a commitment to process, right? Once you have a commitment to process, the rest will follow. Which ERP you use or which HRMS solutions, people management solutions. Because this people, when you are managing so many people, you need a separate IT system to just manage your people, right? And what is your personal level of involvement in some of these, correct? So you have to make life as simple for the factories and the workers and all of them. So constantly working on improving your processes there, constantly digitizing your own manufacturing processes is required. And that can happen when you start empowering a lot of people. In a typical, you mentioned an individual run company where, let us say that the individual has to have control over all aspects of the business. The individual becomes a limiting factor. This is not an easy industry. If one man has to run all parts of the business, and no industry is, frankly. So if you had expected the Indian IT industry to have grown to its size with one man controlling all parts of the business, it would have never grown, correct? So there are structures, there are professionals who will have to handle their individual pieces. Now that let go and having to create a management team who is empowered and who are strong enough to take their decisions and run has to start creeping into the organization. So you raised a very pertinent point, that are Indian entrepreneurs ready for it, and are they doing a good job of delegation so that the organization becomes scalable? This is a question each one has to ask, and if they find the right answers for themselves, then I think all of them can grow.
Sir, what's the difference between Gokaldas and Shahi Exports? How can Shahi grow 25-30% CAGR since last 8-9 years? Like, I always wonder what they do and what the listed industry is not able to do.
No, so I think, see, Shahi's growth started probably, Shahi's growth started about 10-15 years ago.
Yeah.
And they have a very professional team. They have delegated it, a lot of powers to the team members, and they are run extremely professionally well. The decision making is fast and all of that. So I don't think it is a function of the fact that it is privately held or it is publicly held. I don't think that has anything to do with it. It is about how you run the company, right? And who is running the company. So today Gokaldas is doing exactly what Shahi is doing. Very professional, empowered teams which are handling in different businesses or different factories and taking their decisions and running with it. So once you adopt the right model, which has worked successfully in several other industries, take automotive, take IT, take any other successful sector, this is the model which has worked. And once you adopt that model, you will become successful if you are able to successfully execute it. Gokaldas is doing exactly what they're doing. So that's why we are also seeing good growth now.
My last question on this promoter or the product, then I'll request Devesh to jump on the company bit. When you mentioned when the transition was happening of Gokaldas, there was a 4-point agenda. You said that these are the things what you did. Did you involve any expert, external expert, any agency to do that, or
No.
you have a new team which was made in shape, or any whatever, anything which was done in terms of building the building blocks for the company?
No external agencies were involved. I was completely against using any external agency. The ideas have to come from within for ownership of those ideas. If it were an external team's idea, it is their idea. It is not my idea. Why should I do it? Is the common refrain of most people. So the owning of the idea is very, very important for successful execution of the idea. And how do you make people own their idea is the key management lesson here. So we involved the people. We generated our own solutions from within, and people adopted their ideas. While broad parameters were set as to this is what is expected. These are the new requirements. Here is it that I'll support you, but this is how our new trajectory will be. Most of that came from the teams within through various internal workshops, and then we adopted what we thought was right, and we were quite open to pick up the ideas which were working well for us, jettison those which were not working for us, constantly change. So we did not have an ego saying that, I picked up these 5 areas, so मैं उसी 5 पे अटक के रहूंगा. So we were happy to keep changing our strategies which suited us. But one thing we never let go was drive that operational efficiency, drive supply chain efficiency, and ensure that customer should not be left high and dry at any moment. So deliver what we have said at any cost. So some of these basic inviolable mantras were kept. All the rest were tweaked to achieve that. And then once we perfected it, we started replicating it on a mass scale.
Lovely, sir. We'll just take 5 or 10 minutes more to focus on the company now, Devesh, because we've understood the.
So we've spoken on the past, present, so now on the future, sir. So we have now almost a $250 million entity now. So what next from 250 million to $1 billion? So what are the path? What are the steps we are taking? Building blocks.
So there are many, right? One is, if you're doing something successfully, do more of it. Correct? So if I have if I have 20 factories, can I have 50 factories? And the only difference would be that can the next 30 factories be far more cost effective than the current ones, right? So are those in the right locations, for example, right? So that's one way of doing it, and that is definitely on the agenda. So that's why one of the reasons we are going to Madhya Pradesh, or even exploring Bangladesh, for instance, is all looking at low cost locations so that these become sustainable over the next 10, 15, 20 years. So keep doing that is one. Second, obviously diversify your customer base. So try to get a well diversified customer base so that you have the ability to seek more and more growth, right, from those customers. So we're reaching out to many more and endearing us as executing well for those customers. Thereby, the new customers, contribution to revenue keeps going up. So that's another way. The third is, of course, enter into new businesses. So, for example, we are in wovens. So that's half of the business, as I said earlier during this call. So there is another half which is knits. So can I enter into knits, which will give me an incremental growth option. So we are putting up a knits fabric unit, because in knits you have to be vertically integrated, and there will be downstream knit garmenting units which will come along with it, and that's another area that we are working on. So some of these are very obvious and straightforward. We are working on all of those to drive growth. I feel that getting some of these areas to contribute incrementally while we grow on our base business or core business also at a good clip is very doable, and we can race to that target that you mentioned.
What could be the hindrances, sir? This US recession, high cotton prices, declining margins. These are the things, honestly, on a short-term scale, which we keep on hearing from a lot of investors around us. Gokaldas का quarter 3 खराब हो सकता है, वहाँ पे ज़्यादा ठंड नहीं होगी, तो उसका product का demand कम हो जाएगा. US recession में चला गया, तो क्या होगा? All those things. So these are the short-term hindrances. One, what do you think about them? This short-term thing, and over a long-term period, what could be the hindrances to grow from what you said from $250 million to $1 billion? So,
because short-term hindrance, one should never be bothered about. If you are an equity holder, or if you have an equity holder's mindset, a shareholder mindset, what is a quarter or two, right? Because in the subsequent quarter, if things get back, you will come back to normal and more. So, for instance, in the first quarter of last year, government of Karnataka forced us to shut down several factories on account of the Delta wave. Right, the COVID was fast spreading, and for right reasons, they said that factories need to be shut to prevent spread of viruses. Now we took a hit in that quarter. What happened in the subsequent quarter? We just bounced back because things came back to normal, right? So this can happen, and I don't think we should get excessively bothered about short-term events. if your fundamentals are strong and if you know what you're doing, right? On the contrary, if you start panicking in thinking short-term setbacks, that is where the problem starts. So would a recession be lasting for several years? Answer is no. In the fourth quarter of this year, for instance, we will be producing for summer of 23. When is summer of 23? Summer of 23 is June, July, August in the Western world. That's almost a year from now. So after fourth quarter, let's talk of FY24, which starts from April 1, 23, correct? So from that then on, effectively you're producing for something which will be consumed 1.25 years from now. Will there be recessionary trends continuing till then? I have my doubts. Market should, will the inventory problem be there at that point in time? I have my doubts. So these are short-term problems, and we should treat short-term problems as such. Find your way to best address it and move on and focus on the long term, which is where your business gets built. And in the long term, which is, when I say long term, I'm talking of the very next year, not even I'm talking 5 years from now. I'm talking of FY24. There's enough business to take, and you need to not get defocused from that and start working on your capacity, start working on all your capabilities in order to take the business that is coming from the rest of the world to India. So we have to stake a claim for that, and there is enough opportunity. So that's the reason why we are not changing or altering our capex plans much. We are still on course by and large to ensure that we can drive growth going forward. And in the short term, where there are some localized headwinds, we have to address it squarely. So we are trying our best to get as much business as we can, talking to our customers, and touch wood, because of our customer capability and customer service, whatever we have delivered so far, the impact doesn't seem to be as bad as how much my supplier, my customer is feeling. So for instance, during COVID, many of our customers lost business to the extent of 30%. So end consumers buying from my customer, which is the retailer, dropped by about 30%. My business dropped by only 10%. Why? Because even though their demand fell by 30%, they did not cut orders for all the suppliers by 30% each. The weaker suppliers got eliminated, the stronger suppliers got a smaller cut. So that will happen. So we will always take advantage of some of those situations. The best part is, after that, when the market bounces back, you've already consolidated the market. Now on top of it, you will start growing. So some of these things, you can look at it as a setback, or you can look at it as an opportunity. And the way I see it is, if the setback is permanent, it is a setback. But if it is only short term, it's actually an opportunity.
सर, मुझे लग रहा है आप मेरी नौकरी ले लोगे, बिकॉज मैं सारा दिन यही बोलते रहता हूँ कि क्वार्टर से क्वार्टर तक मत देखो, लॉन्ग टर्म देखो, लॉन्ग टर्म देखो. So
that would be just on that part itself, taking from $250 million to $1 billion. So that would mean taking our employee base almost 3x, at least 3x. So are we ready for that? Managing such a large scale of labor pool?
To me, once you manage 30,000, then what incrementally, if we are not doing anything, different, managing this, it just becomes a number, right? I remember somebody was telling me, IT companies were asked, how will you manage 20,000, 30,000 employees? Today, TCS is managing lakhs and lakhs of employees. How are they doing it, right? And those are white-collared employees with a lot of aspiration as well. We are talking only workers, where the approach by and large is uniform, and none of them are saying that I want to become a manager tomorrow and a vice president day after tomorrow, etc., etc. So I think it's a myth to say that it's very difficult. If you can manage 30K, you can manage 1 lakh. I don't think that's a problem. But if you can't manage 50, then expecting to manage 150 or 500 is very tough. But once you have got the ability to manage workers at a certain scale, and we are way past that threshold also, now I don't see that to be a impediment or a challenge.
So my last question, I promise, we will see those days when a textile company, and especially Gokaldas, will make sustainable 14-15 EBITDA margins and can go to plus 20% ROCs also on a sustainable basis.
देखिए, to me, ROC is more important than EBITDA margin, if you ask me, as a measure. EBITDA margin can actually lead to misleading conclusions. For us, material cost is a pass through. So if I work on a high material component in my garment, then notionally my EBITDA margin will be low, but ROC will be better. So you should be careful about which metric to track.
Yes.
Having said that, the ROC numbers are already reasonably high for us, and EBITDA numbers also, when we talk of 13-14%, that's definitely the direction in which we are working on.
And
So
sustainable.
one last question.
Yeah. Whatever I say, it's sustainable basis, clearly.
Okay. Devesh bhai.
Yeah, one last question from my side. So, which is the one of your peers, whether in India or outside globally, apparel exporters, which you admire?
Which I admire.
Yeah.
That's your question. So in India, I admire Shahi. They've done a fantastic job of growing and fantastic job of delivering at scale. Hats off to them. I really admire what they have done. It's a complex business. They've done a superb job of delivering it. There are several players in China as well who have done a very good job being an integrated player as well. So some of them are awesome in terms of their technology, especially on the fabric side, etc. And those ones are also doing exceedingly well. So there are a lot of good companies and a lot of good companies in Korea as well who have a global delivery presence. So not only are they delivering out of Korea, but they're delivering out of Vietnam, Bangladesh, Central America, Africa. So these guys have really gone ahead and have created a global delivery platform. So there are many of them to admire from in the Far East.
सर आपको सुन के ऐसा लग रहा है मुझे कि देयर इज अ लॉन्ग टर्म स्टोरी फॉर दिस टेक्सटाइल सेक्टर इन इंडिया. बहुत आसान लग रहा है. इट सीम्स सो इजी कि यार नहीं वी विल गो टू 35-40 बिलियन डॉलर्स.
कर सकते हैं थोड़ा. मैं तो कहूंगा कि उसके लिए इंडिया में 10 शाही चाहिए. And all of them can coexist, right? So that's the way. I mean, would an IT sector have become so big if there was only one Infosys or one TCS? No, right? And Infosys, TCS, HCL, Wipro, Cognizant, so on and so forth. And then there are also tier 2 IT companies which are also large in their own right. Right? So there is room for many of them. And that is how the Indian industry will grow. It is not just one Gokaldas or one Shahi will take it to 30 billion, but there will be multiple players who will collectively take this industry. And I think that also will happen.
Yes, sir. And plus we need some very, very professional management like you.
Yeah.
That's very, very imperative for this industry.
Yep.
But sir, thank you so much from my side, from Devesh's side, everyone in Omkara. I think this was one of the fantastic sessions to learn about the textile industry. आपसे बहसबाजी भी हुई. अच्छा लगा कि हाँ भी you were very, very, very good in terms of taking all these stupid questions from our side. Helped us explain everything in detail, whether it is the India, global, how the entire transition happened. We all pray not for money, but for India, that actually this sector becomes big, what it deserves going in.
No, I too wish that the sector becomes big and it employs a lot of people. It's socially relevant and will help carry the manufacturing flag for India. It's not a strength area for the country as at the moment, but with infrastructure investments going on in the country, I think increasingly it will become manufacturing ease and manufacturing sustainability will improve in the country. So some of the manufacturing companies need to take advantage of it. We have an additional benefit in that we are very, very manpower intensive. So all the more relevant from that perspective. Plus the fact that we use a lot of women labor. It's great if this industry becomes very large. It's good for the country, and of course, it's also good for the investors.
It is, sir. It is. Thank you so much, sir. Once again, बहुत बहुत तहे दिल से आपका धन्यवाद.
धन्यवाद. Thank you.
Thank you so much, sir.